Okay, welcome to Chapter 4. I'm going to talk about a few things in Chapter 4. Again, most of it you can read and get, but I'm going to walk through a couple problems and talk about a couple things. So Chapter 4 talks about costing a product. So I'm going to go to an Excel spreadsheet here for a second. And let's say that we make t-shirts and pants, and we want to determine what we're going to sell the t-shirts for. And so basically what I need to do is I need to figure out how much it costs me to make them. And for the most part, although we'll get into adding costs in future chapters, we generally have direct materials. We generally have direct labor, and we have manufacturing overhead that goes into the product. So if you think about this, I want you to visualize those costs. In future chapters, when we get into activity-based costing, we'll say, all right, we want to also add selling and administrative expenses to the t-shirts or pants to figure out the true cost. So for instance, let's take a selling cost. Let's say that we have salesmen who only sell t-shirts. So why wouldn't we put the cost under the t-shirts? Again, this is for internal purposes, for like costing a product or setting a selling price in the product, not for external purposes for the financial statements. The financial statements say selling and administrative costs or operating costs. So when I'm talking about generally management accounting, I'm not necessarily utilizing the financial information for financial statements. I can tweak it. So again, think of a lot of times as financial accounting. If you've ever played sports, had kids that play sports, know somebody that plays sports, let's just take high school sports. Okay, think of financial accounting as the game. There are set rules in the game that you have to follow, limits on the number of substitutions, limits on how you score a game, etc., all kinds of rules. However, think of management accounting as the practice. And notice that practice generally follows the guidelines of the game itself, but you can certainly alter the rules as you need to accomplish what you want to accomplish. So for instance, you may not even keep track of substitutions in practice. You may, if you're playing volleyball, you may have the server serve twice just before you rotate. Whatever you want to do, but you generally use the same rules, but you can alter them. So this is the same thing with management accounting and financial accounting. For for financial accounting, I have the income statement, which was sales minus cost of goods sold is gross profit minus operating expenses gives us operating income. And I really need to make the distinction between a product cost and a period cost. Product cost, so we have sales, if I could spell, cost of goods sold, can't type it all. Okay, so I have sales minus cost of goods sold is gross margin, minus operating expenses gives me operating income. And that's a formal statement, if I could type right. That's a formal statement for GAAP for financial statement purposes. All right, and these are product costs. These are costs that go into the product. Product costs are direct materials, direct labor, and overhead. And these are period costs, costs of the period. And so these are selling and administrative. So that's just a little review. Generally, for internal purposes, we stick with these, etc., but sometimes you'll want to add period costs to the cost. So for instance, again, I said, what if I had a salesman that only sold t-shirts? Or another, remember, selling and administrative here. What if I had an accountant that worked for t-shirts and a separate accountant that worked for pants, and I want to figure out, I want the pants selling price to cover all the costs? What if I had an advertising campaign, which is a selling cost, that only covered t-shirts, etc.? So you will see the problems are worded as they say direct cost categories and indirect cost categories. Generally speaking, direct cost categories are these and indirect cost categories are this. Okay, however, if I wanted to add selling and administrative expenses, and I wanted to split my accountant's salary time between them, I would call that an indirect cost category even though it's not manufacturing overhead, because I need to split it. If I had an accountant's salary that only worked on the t-shirts, I would call that a direct cost category, etc. So that's why we use this terminology in cost allocation instead of direct materials, direct labor, and overhead, simply because I might want to make some of my cost categories indirect or direct and violate the product cost period cost rules. Okay, so when I figure out this, and we're going to follow this problem, which does this, although they say they have a direct cost category which includes material and labor, and they have an indirect cost category that includes manufacturing overhead. If for some reason they said one of these was an indirect cost category, you'd treat it like they said, because however the manufacturing process is, it will make sense for that company to treat it as an indirect instead of a direct cost category. So for instance, some of your workers may work both on t-shirts and pants, or let's say for instance that they cut out the fabric into it, and so they're just simply cutting all day, while some of their, they may work on a t-shirt, then pants, then t-shirt, then 4 pants, etc., etc. So you might want to allocate their time. It would be an indirect cost category. But for the most part, this is the normal rule, and again, the problem will probably tell you that they're direct cost categories. You're going to use actual costs for direct materials. So if we want to figure out the actual direct materials cost, if you think about it, you're going to have, all right, a t-shirt takes approximately 2 yards of fabric. Each t-shirt takes 2 yards and it's $10 a yard, so I have $20 of direct materials. That's pretty easy to track and keep track of. And I'm not talking about individual t-shirts, for instance, by saying, oh, I was better on this one and only took 2.2 yards, and the next one I took 2.0, and the next one I took 2.3. Generally, you'll say, okay, I made 100 t-shirts and used 200 yards, so it's on average 2 yards each. So I have my direct materials, it's actual. Same thing with pants. For direct labor, I also generally use actual. Okay? How do I do that? Well, I time them. So again, there's something called a time and motion study, where you would simply time how long it takes somebody. So let's say you're running the sewing machine, you're the direct labor. Someone would time you. And again, just like the t-shirts, we usually time how many they can make in an 8-hour day. Or I'll take a test week and I'll see how many I make in 40 hours. And then I'll take that 40 hours a week divided by the number of t-shirts and figure out how long it takes you to make one single t-shirt. Okay, so again, it's actual, although it may be in somewhat of an average. If you were making custom design things like building a house, you're actually going to keep track of your hours and write them down. I worked for a CPA firm once, and we actually wrote down the client number or name, and we wrote down the hours that I worked on them today. So it was specific for clients. So again, direct materials, direct labor is actual. Okay, manufacturing overhead, for the most part, again, unless the problem tells you otherwise, you have to allocate it. So let's think of some manufacturing overhead items. We have a supervisor salary, we have real estate taxes, we have rent, we have electricity, etc., etc. Okay, so if I have a supervisor salary, let's say just for the period, for the month, of $1,000, I have real estate taxes of $700, I have rent of $1,400, and I have electricity of $2,000. Okay, just made up those numbers. I need to somehow split them between t-shirts and pants in a method that makes sense. Okay, so if you think about it, supervisor salary, okay, I might want to allocate it between t-shirts and pants based on the number of people that are working on the line. So let's say I have 5 people that work in the t-shirts and 3 people that work on pants. So I have a total of 8. Okay, so what I'm going to do for my supervisor salary, these are all my manufacturing overheads. I'm going to say, all right, I have 1,000 and I want to do 5/8 of it needs to go here, and I want 3/8 to go there. Always double check. This should add up to 1,000, by the way. Okay, well, okay, so that's just simple cost allocation. Real estate taxes, maybe these take up a certain amount of square footage in the shop, and let's say this one takes up 400 square feet, and this one takes up 700 square feet, and so I have a total of 1,100 square feet, and notice my supervisor salary, I should change that. And my real estate taxes, I'll allocate based on square footage. 4 divided by 1,100, that gets that percent. Now your book may take this and do a percentage, so they may say, all right, 4 divided by 11 is 36.4%, so I'm going to take 36.4% of that number. You're free to change into your percentages. I don't care about rounding differences. So I have 700 times 700 divided by 1,000. Okay, so I'll have that. So basically, when I get to overhead, I apply it on some method. So it's just a ratio. And you have done ratios your entire life, so please do not make this complicated. All we're doing is saying, okay, the real estate taxes on the whole building is 700. How do I split it between t-shirts and pants and make them in a method that makes sense? And I'm going to do it based on square footage. You may do it based on number of t-shirts and pants sold. You might based on number of people working on it, etc. Just something that makes sense to your business is your allocation. Rent, I may actually do it the same as property taxes. So sometimes you'll even combine them and just do it in one allocation. Electricity, if I keep track of the machine hours that I run on each of these, notice direct labor hours is how long I'm running the sewing machine, so maybe electricity should be based on the hours of direct labor. Okay, so it's just some method. Okay, so the next thing that I want to talk about in this chapter is, do I allocate it between these two things based on actual overhead or based on estimated overhead? Okay, so we have two types of costing. I'm going to ditch these for a second. This is actual costing, and this is normal costing. Okay, those are just terms that you need to know. In actual costing, I am going to allocate overhead. It's applied. That means it's allocated just exactly like I said. And it is applied based upon actual. Okay? Okay, and under normal costing, it is applied, so the same thing, but it is based on estimate. All right, so let's talk about why you would use these two types of things, applied based on actual or applied based on estimate. Okay, notice they're done the same way that I just described. So I would take, the number of hours for t-shirts, the number of hours for pants, add them together and allocate it based on the percentage. It's just the numbers I wrote over here, so I don't remember what I wrote, but let's say property taxes. So I said, let's say I have $2,000 of property taxes. Okay, it's this number. Is this number the number of actual property taxes I spent during the year, or is that the estimated property taxes I spent during the year? And which one you use just depends on what your needs are as a business. So let's take normal costing first, okay? Normal costing, let's say I have a car repair shop that deals with the public on an ongoing basis. So I open my business on January 1st, and on January 2nd, I have my very first customer. I need to charge my customer actual amount of direct materials, so they have certain parts that are going into their car. I'm going to charge them an actual amount of direct labor, and then I need to charge them some overhead. Most of the time, car repair shops will apply your overhead based on direct labor hours. So for instance, if they decide our overhead is $50 per direct labor hour and I had 2 hours, I'd have $100. Okay, why am I using estimates for the car repair shop? Because I opened on January 1st, had my first customer on January 2nd, and I probably have 0 bills that I know about. So the only way I can bill that customer on January 2nd is if I apply it based on estimate. How do I apply it? Well, I'll add up. So I have my property taxes, supervisor salary, I have rent, and I have machine depreciation. There's tons of overhead. I even have electricity, I think I said. Okay, tons of overhead items. So at the beginning of the year, oops, I'm just making up some numbers. Okay, machine, at the beginning of the year, I'm going to estimate how much of my overhead items is going to have. And I need to split that out between all the cars that I think are going to come in here. Okay, and I probably won't divide it by the cars because some cars will require extensive service and some of them will require an oil change. So I'm probably going to estimate the hours I work on a car, the car's year. So if I have 2 workers, let's go down here. I have 2 workers, and if you work full-time for 50 hours a year, 52 weeks a year times 40 hours a week is 2080. Okay? So if I have 2 of them, I have 4160 hours in and more. But we all know that in a car repair shop, you don't work 4160. You don't work every second of the day. For first of all, I might have vacations. So what I'm going to start doing is I have my 4160, and I'm going to say, okay, I have 2 weeks of vacation. So 2 people times 2 weeks of vacation. So I'm going to subtract off 160 right there. Okay, and then I may say, all right, I want a certain amount of time for cleanup and general setup, so I'm going to subtract another 200 hours during the year. And then I may say, okay, in any given week, I might have 10 hours, 20 hours of downtime, so I'm just kind of making this up. So I'm going to subtract out another 600 hours for downtime. And this is my estimate of the number of hours that I'm actually going to work during the year. And I'm making up these numbers so you're going to see it's not going to make that much sense. So this is per month and this is per year, so I need to take this, actually I want to do it the entire year. So, okay, so I have 93,600 of overhead during the year, and I have 3,200 of hours I'm going to work. So I'm going to take my 93,600 divided by my 3,200 hours, and I'm going to charge overhead out at the rate of $29.25. So again, I'll charge out my actual parts, right over here. I'll charge out my actual parts. I'll charge out, let's say, my labor hours. I pay my workers $20 an hour. So let's say I put in brakes, so I spent $200 on brakes. I charge out my labor at $20 an hour, and they worked at 2 hours, so $20 times 2 is 40 hours of labor. And I have 2 hours of overhead, so I have 50. So this bill is going to be $258. Looks like I missed a number. $298 is their bill. So what I am ignoring is a markup or profit on these, which is also in there, but we're not dealing with that. I just want you to visualize this. Okay, why do I have to estimate them? Because I need to charge them out as we go. Okay, let's take case B. In case B, I have 2 divisions. So let's say we're at Quincy University and I have the School of Business and I have the Science Department. Okay, so let's pretend those are the only divisions we have in Quincy University. All right, nobody is charging tuition based on the day you come, et cetera, et cetera. We charge tuition based on, it's set at the beginning of the year, we estimate it to cover costs, et cetera, et cetera. So an estimate is made for tuition, et cetera. But let's say that I'm in charge of the School of Business and somebody else is in charge of science, and they want to figure out how we've done and compare our work during the year. Since they don't need to have this information until year end to evaluate it, we can wait until year end and take the actual numbers for property tax and supervisor salary, rent, et cetera, and allocate it by whatever in the heck we're going to allocate it on based on number of students or whatever we're going to use it. And we can wait till the end of the year. So depending on your needs, do I need the information right now? Do I need to estimate it at the beginning of the year so I need to know how much I need to charge out on my bills? Or can I wait till the end of the year and I'm just doing it based on overall evaluation and I can apply it based on this? So that's the difference between actual costing and normal costing. So make sure you pay attention to that terminology. Okay, so this is your first problem, and I kind of have it here. Actual costing is actual, and applied based on actual. So I have to do it at year end or after year end, quite frankly. And the formula is still actual overhead divided by actual base. And over here, I have actual applied based on estimate. So your formula is estimated manufacturing divided by estimated base. There is a third costing system that this chapter touches on a couple times, whereas it's called standard costing. And standard costing is really where I use basically a standard based on estimates for direct materials and direct labor also. So I will say, I want to know how much, let's talk about direct materials. I have had one person actually who is an expert at sewing go through and tell me how much material I should use. Okay, so for a t-shirt. And so that's standard costing. Usually in unique special order things such as building a house, you generally use actual because I put in a different faucet for your house and lighting for your house and flooring for your house, etc. So I have my actual and my actual direct labor. So I might have 10 people working on a huge house and 3 people working on a smaller house, and I keep track of their labor, but then I have to somehow apply for the tools and that type of thing. So anyway, so let's get with this one. I have Acme Construction assembles residential houses, builds houses, and uses a job order cost system with 2 direct cost categories. We talked about that, direct materials and labor. This is what they usually are, but they don't have to be. And 1 indirect cost pool, assembly support. So this is their overhead item. Direct labor hours is the allocation base for assembly. So right now what I would do is I would put assembly support divided by, because I don't know if it's actual or estimate right now, but assembly support divided by direct labor hours. That's the base. Or just to draw a dividing line and put an arrow to your base, it's direct labor hours. In December 2011, they budget, so that's based on normal costing, assembly support to be $8,700,000 and direct labor hours of 145. So I'm going to take my estimated, this is for normal costing over here, estimated overhead divided by estimated base, so 8.7 divided by 145. I'm going to give it $60 for every direct labor hour they have. So if they have 2 direct labor hours, I'm going to give them 2 times 60. Okay, here's my information during the year. Okay, and I'm going to skip down here. In 2012, actual assembly costs were $7,470,000 and actual direct labor hours were 166. So for actual costing, I use actual cost divided by actual base. They're going to get 45. Okay, and so why do these differ? Well, because one's based on budget and one's based on actual. Okay, so what is the costing? So in both cases, I'm going to do direct materials, actual, so I'm going to pull from the table. Direct labor, actual, pull from the table. Okay, so look at this number, and this number's the same. This number and that number's the same. I should say direct materials and direct labor is the same here. Direct materials and direct labor is the same here. So this is normal costing, actual costing. So actual materials, actual labor for both of them, actual materials, actual labor for both of them, but it's simply how I apply the overhead. Okay, so notice my direct labor hours for Laguna were 980. So for normal costing, I'm going to take 980 times 60. For actual costing, I'm going to take 980 times 45. Okay, so that shouldn't be, $60 times 980 for Laguna, $45 times 980 for actual costing. Okay, so 980 hours. 980 hours, one uses the 60 normal, actual costing uses the 45. And under mission, 1,000 hours times the 60 or 45. So you can see that they differ. And again, it just depends on if, in most of the time, they will use normal costing because we need to charge out to these people and send them a bill before we have our actual costs. Okay, and you can kind of see this. So sometimes notice that this is in essence off. So next year we tried to correct it and make it more accurate in our estimations. So that's that one. Okay, let me pause it. Okay, notice this one is pretty much the same. So we have Braun Brothers is an architectural firm specializing in high-rise buildings. Job order costing system has a single direct cost category, architectural labor. So we don't have materials. Apparently they're just designing the building, so they don't have a lot of materials in the architectural firms. I guess the only thing that you could possibly have is blueprint paper or something like that. So we just have direct labor, and we have a single indirect cost pool that contains all costs in the supporting office. So basically we have direct labor and overhead. We have no direct materials. Office support costs are allocated to individual jobs using architect labor hours, so direct labor hours. So I'm going to have my manufacturing overhead, either actual or estimated, divided by our base, and our base is architect labor hours. So make sure that I tend to write a division sign and put architect labor hours on the bottom, so I remember that. Okay, so normal costing uses the budgeted amounts and actual costing uses the actual amounts. So the first question is, A is actual costing, so I want the actual cost. So I have 2340 divided by my actual hours of 39 gives me $60 per hour, whereas if I use normal costing, I use the budgeted amounts, 361 and 3650. Okay? Let me stop and back up a second. I need to do our actual. Okay, so I'm going to compare this one to this one. Okay, so this is for professional labor. So this is for this one right here. Let me cross that off for just a second. That's one for the standard costing. Just a second. Okay. All right. So I have my office support costs, 2340. That's my actual office support costs, and my budgeted office support costs are 22650 right there, right here, and right there. Okay, so this will be my for $60 is for actual costing, $61 is for normal costing. Okay, this one here is if I have standard costing, where I'm just basically going to use budgeted for my direct cost category. And not too many of these problems have standard costing over all of them. Okay, so which one would you recommend they use? And again, it kind of depends on, if you read through these, kind of depends on when they need to know the information. If they need to know the information to send out bids or to send out a bill, then they need to use normal costing. If they don't, then they can wait and use actual costing. But generally speaking, when you're charging customers for things, you usually use normal costing. Okay, and then you can kind of go through the rest of it and ask me if you have any questions. So I'm going to pause this or stop this and record the other problems on a different video, since I have a commitment I have to go to.